Hey there, everybody. It's August 30th, 2021. It's Market Monday. We're going to take a quick look at the markets and what's happened, at least recently. We've had a momentum shift last week. Markets are back up. NASDAQ and the S&P. We're also talking about record performances again. A lot of it had to do with what Chairman Powell said on Friday. He expects to begin tapering the bond purchasing program later this year without a specific date, but I don't think they're going to go very far, very fast. I think the markets like that. Oil kicked up a lot last week, and this really had to do more with the recovery picking up steam as oil picks up demand here, or the markets pick up demand for oil. It's going to be a busy September, as it always is in terms of information, people going back to school with COVID and so on. Small caps have come back, which we needed them to because the breadth in the marketplace, the number of stocks which are performing well, was getting kind of narrow. So fewer stocks were doing well as opposed to the broader markets. We'd like to see the S&P kind of matched by the Russell 2000, which is the smaller companies. At a 5% week, so it was kind of nice, but they're still lagging really since March. They haven't gone anywhere. Inflation kicked up here, which is a concern. 12-month now 4.2%, highest level since 1991. On the other hand, the jobs unemployment rate fell to 5.4%. So we're kind of on track there to what the Fed thinks is important. Total returns, again, we're in the high teens here, low 20s for the most part. Volatility is kicked down, which is also a good sign, typically. Market heat map basically shows the differences in being in the right kinds of stocks. We're looking here at value versus growth. And ironically, small cap growth has dramatically underperformed. So we might get a little mean reversion there. We might want to look at small cap growth, but it seems the value play is alive and well. From a market overall standpoint, the fear and greed index, this is CNN's little index about 6 indicators of the market. It looks like people are a little more comfortable, perhaps, at a 58 with taking on some risks. This is more than the average. A week ago, it was more fear-based. So that happens in a week. People seem to get more comfortable where the markets are going. Again, a lot of it has to do with what Chairman Powell said. So I wouldn't be surprised if we get a little uptick in the market based on that chart, and we are still risk on from a long-term investment standpoint. We are risk on. A shorter-term standpoint is a very difficult and choppy scenario. So if you're an investor, like most of my clients are, we are sticking with our allocation to be fully invested in stocks and equities and look forward to a performance this week in those categories. When we talk about small and mid caps, as it relates to what we do here, we do run a small and mid cap opportunities portfolio of individual stocks. Some of you have it. It is available if you want to get into the small cap area, which we think there are significant opportunities. I'll be happy to talk to you more about this. So we'll go off and leave it here for today and wish you a well and happy week going into Labor Day. We'll talk to you soon. Jim Hiles out for now. Thanks.